Hello, and welcome to the September 11th, 2025 meeting of the Governmental Accounting Standards Board. Great to see everybody this morning, have everybody here. We've had a great, productive couple of days with revenue and expense recognition moving forward. Had our third public forum for our going concern project with the preliminary views of severe financial stress and probable dissolution. And yesterday, subsequent events moved forward, and then we spent a long time on infrastructure, but it was a very productive time. So thanks, everybody. And so we're in our final day of the board meeting, and we're going to get to the voluntary digital financial reporting project in just a bit. But first, we have an informational session, and Laura Schutze is with us. Schutze?
Schutze. Yep, you got it.
Schutze, I got it right the first time. Excellent. Is graciously agreed to be with us. Laura is a partner with Grant Thornton and a member of the AICPA's Auditing Standards Board, and there she is the chair of the Task Force on Going Concern Uncertainty. And so Laura has graciously agreed to come and provide an informational session to the board on AUC 570, which is the auditing standards literature that applies or includes the going concern concept. And as we work on our overall going concern project, it'd be great. It's great to have some information and expertise from somebody that's very steeply involved and knowledgeable about the subject. Certainly, there are members of the board that feel comfortable with it too, but it's always great to get that information and be sure we're making the most informed decision possible. Laura, in the interest of time, I won't introduce everybody here. It's actually kind of a lot. I don't know if you've been to our office before. There's a fair number of people in here, but it's all 7 of the GASB board members and then a pretty large contingent of our staff as well, including the project that's going next, the digital financial reporting project, but also the going concern project team, including Deborah Beams, its leader, who you met the other day when we talked. All in the room, and Alan Skelton, our technical director, who was in that meeting too. We're all here, but Laura, we're going to turn it to you, and if you provide us with information on 570 and with your expertise and knowledge, we would really appreciate it. Thanks.
Yeah, great. Thank you so much for that welcome, and it's nice to meet everyone virtually. I'm going to go ahead and share my screen, so hopefully you can see.
We can see your screen. Yes.
Awesome.
Yes, we can.
Look at me. It's technology this early in the morning. All right. Thank you again for that warm welcome. I'm here to provide you kind of with an overview education on AUC 570. And really my hope today is that our discussion of the standards, finer points might assist the board as you continue to deliberate your project on severe financial stress and probable dissolution. As Joel mentioned, my name is Laura Schutze. I'm an audit partner with Grant Thornton. I've been with GT for 20 years, almost to the day. Tomorrow is actually my anniversary. And I was part of the audit practice before joining the national office, where I focus on audit methodology and standards. But I'm here today in my capacity as an AICPA Auditing Standards Board member and chair of the Going Concern Task Force, as Joel mentioned. So here's our agenda, which includes discussing the standard, but also highlighting some key points from the ASB's research in 2022 related to going concern. Please note that the views expressed today are my own and do not necessarily reflect the views of the AICPA, any of its committees, including the ASB and expert panel, or Grant Thornton. So with that out of the way, let's discuss background and applicability. So historically, the evaluation of an entity's ability to continue as a going concern was largely an auditor responsibility. But with FASB ASU 2014-15 and GASB Statement number 56, the onus for evaluating whether conditions or events exist that raise substantial doubt about the entity's ability to continue as a going concern now fall on management. So AUC Section 570, as it exists today, was updated in 2017 with SAS number 132. And while the project was completed in response to a corresponding project with the International Auditing and Assurance Standards Board, the ASB also recognized the evolution in the US financial reporting frameworks. And so SAS 132 was really intended to better address those consequential effects of the FASB and GASB rules. So it was developed to be accounting framework neutral, but application guidance includes the U.S. financial reporting frameworks as examples. Given the differences between the U.S. frameworks and international accounting standards, I will note the ASB did not fully converge with the international auditing standard, but instead maintained certain jurisdictional terminology and performance requirements that are rooted in our financial reporting frameworks, even though the standard is technically framework neutral. Now, in terms of applicability, I'll tell you, when this standard came out, I was shocked at the various scenarios and different questions I got from teams. It has required a great exercise of professional judgment in terms of reconciling the audit requirements to certain scenarios with financial reporting. But at its core, AUC 570 applies to all audits of a complete set of financial statements, regardless of whether the financial statements are prepared in accordance with a general purpose framework or special purpose framework. So I want to focus today on a complete set of general purpose financial statements, which are prepared using the going concern basis of accounting, unless the liquidation basis of accounting is appropriate. Under the AICPA's rules, GASB GAAP is recognized as a general purpose framework, and GASB 56 indicates that continuation of a going concern is assumed in financial reporting in the absence of significant information to the contrary. So today, I think the GASB requirements fit pretty well with AUC 570 in terms of applicability. Now, I will note that the standard indicates that in other financial reporting frameworks, there may not be an explicit requirement for management to make a specific assessment about the entity's ability to continue as a going concern. An example of that might be a special purpose framework. But nevertheless, when the going concern basis of accounting is a fundamental principle in the preparation of financial statements, in the context of fairly presenting those financial statements, the preparation requires management to assess the entity's ability to continue as a going concern. So even if the financial reporting framework does not include an explicit requirement, fundamentally in the process of preparing a complete set, the going concern basis kind of is still bubbling, I'll say, underneath the surface. All right, so let's talk about the objectives of the standard. So first, the auditor is to obtain sufficient appropriate audit evidence regarding and to conclude on the appropriateness of management's use of the going concern basis of accounting when relevant, and essentially whether the financial statements are appropriately prepared on the going concern basis or should be prepared on the liquidation basis. Now, as I highlighted, the going concern basis is relevant for GASB GAAP. Next, the auditor should conclude, based on the audit evidence obtained, whether substantial doubt about the entity's ability to continue as a going concern for a reasonable period of time exists. Now, reasonable period of time is defined in AUC section 570 as the period of time required by the applicable financial reporting framework. And if no such requirement exists, then the audit, the audit definition kind of kicks in, which is within 1 year after the date the financial statements are issued or available to be issued. And so this definition, when you take it under the auditing standard, takes into account the differences between public business entities and non-public business entities in FASB GAAP. The auditor is also required to evaluate the possible financial statement effects, including the adequacy of disclosures regarding the entity's ability to continue as a going concern, particularly when conditions or events raise substantial doubt. So the auditor accomplishes the related requirements by again looking to the financial reporting framework and considering how management met their responsibility for disclosures that are adequate in the circumstances. And then the final objective is for the auditor to report in accordance with this AUC section. And we'll talk a little bit about the auditor reporting here in a minute. Okay, so want to hit some of the key provisions relating to AUC 570. So first, this notion of kind of two conclusions. So we have two conclusions to reach in terms of going concern. First, the auditor concludes on the appropriateness of management's use of the going concern basis. And as for how it applies to GASB financial statements, the going concern basis of accounting is currently an explicit expectation. But under GASB standards, there's no alternative, right? Like FASB's liquidation basis. So therefore, I think you could characterize this part of the conclusion, or this particular conclusion, quote unquote, easy in the context of the audit of a GASB entity, because the going concern basis of accounting is really the only option, right? Now, the second conclusion relates to the auditor needing to needs to determine whether there are conditions or events considered in the aggregate that raise substantial doubt about the entity's ability to continue as a going concern. So when we get into the audit work related to substantial doubt, the auditor considers during risk assessment whether any events or conditions exist. And the auditor also determines whether management has performed its evaluation of whether such conditions or events exist. So again, for GASB financial statements, this means preparers are supposed to evaluate whether there is substantial doubt about a government's ability to continue as a going concern for 12 months beyond the financial statement date. That's how GASB 56 is written today. Preparers must also consider information that's currently known to the government that may raise substantial doubt shortly thereafter. Now, if management identifies conditions or events that raise substantial doubt, the auditor then understands and performs audit procedures to evaluate management's plans. So can those plans be effectively implemented? Do they actually mitigate the identified conditions or events? But overall, the North Star, if you will, is the financial reporting framework. So if there are disclosure requirements related to conditions or events, and management's plans mitigate those conditions or events, the auditor evaluates the adequacy of those disclosures against the financial reporting requirements. So ultimately, in my personal view, this boils down to disclosures and the adequacy of those disclosures in the context of the financial reporting requirements, as well as presenting fairly the financial statements in all material respects. So again, personal view, even if a government entity may not actually be able to cease to exist, the going concern basis is still a fundamental principle in the preparation of financial statements. And GASB 56 has those disclosure requirements that provide valuable transparency to users with regard to conditions or events that the entity may be experiencing and management's related plans. So in terms of auditor reporting and the implications on the auditor's report, in instances where management's plan alleviates substantial doubt, the auditor issues an unmodified opinion. Now, obviously, that assumes everything else in the audit checks out, right? But if substantial doubt remains, even after considering management's plans, the auditor includes a separate section in the auditor's report titled Substantial Doubt about the entity's ability to continue as a going concern. And the Auditing Standards Board refers to this as exception-based reporting. So we are only going to report regarding going concern when there is an issue or there is substantial doubt. And this is actually different now than if you compare to the most recently issued Auditing Standards Board from the International Standard Setter, which actually implemented kind of constant reporting. So moved away from the exception-based and moved into the auditor is going to be required to say something about going concern in every audit report. Now, if the going concern basis of accounting is not appropriate, so that is the financial statements should be prepared on the liquidation basis, the auditor issues an adverse opinion. Going back to that first row, though, there may be instances where management's disclosures are not adequate. And in that case, the auditor either expresses a qualified or an adverse opinion on the financials as a whole, depending on the circumstances. So, and that is because there is a misstatement related to those required disclosures. So maybe with that, before we jump into the research, maybe I'll check to see if there are any questions on what we've covered so far.
Thanks, Laura. Any board member questions or any questions? So I guess I'm looking at what you have left to cover, Laura,
Yeah,
and
yeah.
I've struggled with this almost the whole time. We've
Yeah.
kind of had some of these debates of going concern and the going concern basis of accounting, or kind of the fundamental underlying principle that the entity will continue. I get is why this is so important, like uniquely important, that the auditing standards have to specifically call it out in this way and have the report always address it in some way at this point, because the accounting framework, it is built, and how you measure the assets and liabilities, everything is built on the assumption that you will continue. And if there's substantial doubt about you continuing, then maybe everything that you're accounting should be different. It shouldn't be measured that way, et cetera. And so I think the part I've struggled with is, in the private sector, it's logical to me to tie your ability to pay your obligations as they come due with your continued existence, because private entities, if they can't pay their liabilities, they can't just keep going. They're gonna, somebody, something's gonna happen and they're gonna get shut down. In the government space, we're different, right? And we've kind of talked about a lot those unique differences. And so I guess the struggle that I have had is, when I read the auditing literature, and I think here's the question I was trying to drive to and see if you have any perspectives. When I read the auditing literature, it actually doesn't talk about the liability payment part very much at all. It talks about continuing to exist a lot until you get to like the application sections. And it's like largely, if not almost completely, in the application sections of the auditing literature, that you're using that to help you evaluate going concern more often. Now, I get the accounting literature had those tie-ins, and maybe that's why the auditing literature didn't have to. But I guess I'm trying to get at what's the real emphasis and what should be the emphasis. Is it the continuing to exist part? Does it have to include the payment of the obligations part, given our situation of we're not the same as the private sector, and what happens to governments if they don't pay their obligations isn't always the same. So I do you have any perspectives about maybe why the auditing literature really focuses on the continuing to exist part, and it's only application when you get to payment of obligations?
I think that it really is because the auditing standard was intended to be framework neutral. So it comes down to, how does the accounting framework or the financial reporting framework define the notion of being able to continue as a going concern? And right, like we define in the standard reasonable period of time, but really the definition is, what does the accounting framework say is a reasonable period of time? And then if it doesn't, then use our definition. And I think that that's kind of along the same veins in terms of, what exactly is the auditor looking at and considering, needed to be a little bit more framework neutral. And so that's why when they were doing the project back in 2017, it was very important to have that application material to help the auditors here in the US to really understand how to apply these principles-based requirements to the frameworks that we have here in the US. I think that that's really, the main reason why you see it written the way that it is. I think personally, whether or not they have the ability to meet, their obligations as they come due, versus will they even exist? I think to your point, in my view, ultimately what truly matters is the disclosure and the transparency to the users. And so that's why I think, even though a government entity can't cease to exist, it's really important to the users to understand that, and you guys have introduced this notion of severe financial distress, and I've kind of analogized it to the close call on substantial doubt. So there are events or conditions, but management's plans alleviate it. We refer to those as close calls a lot. I kind of analogize the two, and that it's almost like not a warning, but at least the transparency to the user of, hey, things aren't quite right here, right? And we've got this whole liabilities section, of our balance sheet, and it's very possible that we might not be able to meet these obligations. So even if we're still around, we might be struggling. And so that's where I thought the preliminary views document was extremely interesting, to kind of start to divorce this idea of actual, ceasing to exist versus you're just really struggling from a government entity perspective. Because I agree with you. I think that, when you have the chair of the GASB and the auditing standards board and the expert panel having these philosophical discussions about really, when you get down to it, what truly matters, I hope that, that's why we're talking today. Hopefully we can continue the dialogue to make sure that, ultimately, I think what we're all working towards is the public interest, transparency to users, which I think, I'll touch on here with the research of how important it is. Ultimately, how do we slice and dice it? Does it really matter? I think it does. But at least making sure that we can all reconcile among each other so that there's not confusion among users, I think is really important. So I don't know if that helped at all, but
it did help, Laura. I appreciate it. It gave I think a good perspective of maybe why it was written the way it was written, and what the thoughts are and intentions. So that was very helpful. And I do hope we continue the dialogue. I'll probably wrap up a little bit more eloquently at the end. Any other questions before Laura continues? Because I'm interested to hear about the research, but any other follow-ups or questions? Let's keep going and hear about the research.
All right, let's do it. So the last thing we'll cover is some research that the ASB undertook in 2022 related to going concern. And I'm going to highlight mere snippets of this amazing work that was led by Greg Jenkins, another ASB board member and professor at Auburn University. And so the broader context of the overarching research may not be apparent, because I did kind of cherry pick the snippets that I thought you all would find of most interest. But the full summary of the transparency interviews were presented in an ASB public meeting in January of 2023. Okay, so interviews were conducted and recorded via Zoom in late 2022 with 26 individuals that identified themselves as either users, preparers, or a combination of those three. And their professional experience averaged about 28 years in a variety of industries, including not-for-profits, financial services, power and utilities, and technology. So we really ran the gamut from an industry perspective. But the interview topics included first general questions regarding auditors' reports and financial statements, then questions related to fraud, and then questions related to going concern. So going concern was part of this much broader research agenda. So when asked about the extent to which they use and rely on the auditor's report, we observed that it is commonly used and relied on, with 42% at least skimming the report and focusing on modifications or non-standard language. That observation was really important to us, considering that we're in this exception-based model of reporting. But even at this early point in the interviews, we observed that some users really conflate the auditor's report and the financial statements. And at times we had to sort of remind the interviewee about whether we were discussing the financial statements that were the responsibility of management versus the auditor's report and the auditor's responsibilities. So we thought that was a really interesting observation. When asked whether the auditor's report provides useful information when there is substantial doubt, 71% said it did. And commentary provided during this discussion really included the fact that there's a time lag, between the end of the financial statement period and the auditor's report. And so the longer the time lag, that really reduces the usefulness of the auditor's report information. And there was some sentiment that GAAP's definitions should be clearer, and the report should be in plain English. Respondents were also asked whether close calls should be included in the auditor's report. And interestingly enough, 44% said no. And their reasoning included the risk of false doubt or this notion of like a self-fulfilling prophecy. And some interviewees also noted that the auditor should not be the original source of information relating to the entity. Respondents were also asked whose responsibility it is to present information about an entity's ability to consider an entity's ability to continue as a going concern. And overwhelmingly, 83% of respondents believe this information should at least come from the entity's management. And if I recall correctly, the options were management, those charged with governance, and the auditor. And so it should at least be coming from the entity's management. And then interviewees also thought that providing close call disclosures in the financial statements could enhance management's response to those matters or enhance the dialogue between the auditor and management on the topic of going concern, and would also help users in understanding the risks related to the entity. So that was kind of what I was touching on in terms of, the disclosures really helping users understand what's going on and getting those additional insights. And so, again, very high level, very cherry picked insights into Greg's research, which does not give it justice, but kind of given the time that we're on, hopefully that at least provided you, I cherry picked correctly in terms of what you might find interesting. The ASB has also continued research in the area of going concern specific to auditor reporting. And all of this research going back to 2022 has informed our own ongoing project on this topic. And so with that, I think we have a couple minutes left for Q&A, if there is anything else that folks might want to discuss.
Thanks, Laura. Any questions? Laura, I do have, oh, Jeff, sorry.
Laura, hey, this is Jeff Praviti, GASB board member. I have a question just to make sure I understood. On the research slide, you talked about some users found the substantial doubt less useful, if I understood it correctly, because of the time lag. Was that one of the predominant reasons? And I'm thinking about that in the context of this was being done in the context of private entities, right? Or whereas in governments, we have sometimes significantly longer time lags in the release of financial statements. Were they saying that even with their, in our world, pretty limited time lags, that substantial doubt determination was hurt because of just the inherent lag between, the date to the release of the statement?
So I think, and I will do my best to only discuss what I actually recollect from the interviews and from Greg's presentation. But I think the concern was that if you use an evaluation date, let's say, of the balance sheet date or the date of the financial statements, which I think is what GASB 56 has, if you're not issuing your auditor's report until, say it's a 12/31, you're not issuing your auditor's report till September, that's 9 months of the next year, that I think there was an impression or a thought that the auditor hadn't maybe done anything with those 9 months. Whereas under FASB, you're required to evaluate it based on when the financial statements are issued or available to be issued. So from a FASB perspective, in my view, the time frame doesn't become between issuance and the period end doesn't become as big of an issue, because the auditor is required and management is required to consider kind of that broader time period. And so I think the notion was, okay, well, I'm getting this audit report 9 months later, and you're telling me there might be an issue or there's substantial doubt about the company. Well, we've got 3 months left in those 12 months till the next balance sheet date, right? So I think that was more the concern from the time lag perspective, is the users being sure that the users understand what the auditor and management are doing in that intervening period. And so I think it's important for the accounting frameworks and the auditing standards to, kind of close that gap a little bit and make sure that it's clear kind of what those true responsibilities are for that time period.
Thanks.
Laura, one last question. The comment letter that the AICPA provided talked about jargon, and you mentioned it on the last slide or the next last slide that came from the research. Was the jargon, I'm trying not to put my interpretation into my question, but was the jargon about the auditor's report or note disclosures and their descriptions of what was going on, or was the jargon more the term going concern and or what it means? Like what was the jargony thing that they were pushing back on a little bit?
So that's a good question, because that was one of the areas where we observed kind of that conflating of the audit report and the financial statements. And so, where exactly do you want the plain English? I remember kind of asking that question, and at least in the interviews that I participated in, I remember them just saying everywhere, right? The auditor's report has a lot of technical language in it, but these financial statement disclosures, I think everyone agrees that this idea of going concern is confusing. And, the word concern normally has a negative connotation, but going concern is a positive thing. It means you're going to continue. So I do think it was actually both when we were able to kind of dig in and understand a little bit more like where that jargon lies. So that the audit side of it is where, we're taking that up in considering auditor reporting overall, and then also just in terms of going concern.
Thank you, Laura. That's helpful.
Yeah.
Any remaining questions for Laura before we let her go? All right, Laura, thank you so much again for your time. I kind of doomed myself a few minutes ago. I said I would be eloquent. I'm never eloquent, so I don't know why I said that. But we really do appreciate your time. We appreciate you and the group meeting with us a week or two ago. And we very much look forward to continuing that dialogue in the coming kind of weeks and months, although maybe in a way sooner rather than later, but making sure we take the time to dialogue, get to the best answer for both of us so that it's workable between the accounting standards and the auditing standards, but hopefully achieving our objectives with the project and making this, work within the government context and make sense within the government context. But we appreciate you and the ASB and the whole AICPA being willing to work with us. So we look forward to meeting with you again soon.
Yeah, absolutely. And thank you so much for your time, shoving me into the agenda, which seems like it was already packed. So I really appreciate the opportunity to talk with the full board today, and again, to kind of meet you all virtually. And likewise, I think that this is a really exciting opportunity for all of us to collaborate and make sure that we assist you in understanding kind of the audit implications on the accounting side to make sure that kind of everything in the ecosystem works together. So thank you.
That's great. Thank you. And thank you for fitting us in on late notice. We just kind of talked about this a couple of days ago, and here you are. So thank you.
Yeah,
I know you're busy.
Yeah, thank you
Talk
all.
to you
Take
soon.
care.
Bye. All right. Let's move directly in then to voluntary digital financial reporting. Team is in place. This is what you can do when you have a virtual presentation. There's no team transition. The next team's already up and ready. So Paulina, I will turn it to you to start us off on our papers for the digital financial reporting project.
Thank you, Joel. Good morning, everyone. So we have 3 papers for your consideration today, and give me a minute. I'm going to share because I don't want to see myself on the screen. Does not sound like a good thing to do. Perfect. Okay. So as you know, we have 3 papers for consideration today. They are super excited to talk to you about capital assets. It's the first time you're going to see the modeling for line items. I always tease about it. I think the work in the taxonomy that we have done thus far is very foundational. We have developed the reporting entity, the reporting model, a lot of components around it that without them, we really couldn't do the rest of the work. And most of the people just ignore them. They're the headers, they're the underlying assumptions. There's just not fun stuff. They're fun stuff for us. But when you get to the line items is really when people pay an awful lot of attention because that's how it affects me, right? Are my line items there? Are they representational? Do they work? And so this is really an important component of the discussion. Is the first time you see line items. And so as much as we would welcome and appreciate any feedback on line item specific, we do want to have an awful lot of discussions of a direction philosophically on how to continue to model line items. There are some challenging issues and interesting discussions that I think we're going to have, and that should help us then continue the work in the line items we're worrying through. The other two topics that we plan to talk to you relate to MD&A and Statement 100. Just for context, MD&A would be the last component we work with you in unstructured data. So we would have completed all the pieces that we want to expose for unstructured data. We have statement summary significant accounting policies. We have the MD&A as unstructured data, and you'll see the pieces of Statement 100 of unstructured data, and that would be all that we would expose of non-structured data. Next meeting, we plan to bring you an inventory of note themes. And there would be simply large L1 boxes that we plan to put in the DM, and that really complete the work for this phase of the project related to unstructured data. We have completed everything we agreed to talk to about RSI. That would be the last of them of unstructured data. And then from this point forward, all we're going to be doing is talking to you about line item clusters, components of assets, components of liabilities, and that nature to get through to be able to have the entire content for the DM. So with that, we're going to start a discussion with capital assets. Christian is going to lead us through. The board discussion questions are all put, I think, at the end of the presentation, but feel free to interrupt whenever you have questions or issues. And like I said, there's several very directional issues that we would like to discuss with you as we get through and potentially at the end. So with that, Christian.
Hey, good morning, everyone. Thank you for the introduction and overview there, Paulina. Like she mentioned, the team is incredibly excited to be here to present and overview our progress on this first cluster of line items for the model that we're bringing, which is specifically focused on the capital assets, which will be situated largely between the assets section of the statement of net position. We do define cluster in attachment D to paper 1 as a group of related line items, which may be used across multiple modules, such as the government-wide statements and the proprietary statements of net position. As we go kind of throughout this discussion today, we'll be taking a brief peek at what some of that may look like there. So in order to create that model and start to get where we are today, we needed to come up with this idea, this inventory of what the line items would be. And we did that by reviewing a couple of different sources. We started by looking at the reporting requirements associated with capital assets from our authoritative literature, but we also looked at a random sample of just around 300 governmental annual comprehensive financial reports to see what items were in observed practice, what line items that those governments were using, how they pair up and match with those reporting requirements, as well as any more granular information that was being presented there. So this next slide is kind of the bulk of the work and everything that we're seeing in attachment C to paper 1 as well, just broken up into a few different components. And this shows those reporting requirements, the modeling requirements that we established. So you can see that there's a couple different colors on the slide. We'll start with the green, which are those line items that are GAAP required or GAAP permitted. So these are, items like total capital assets, which we're identifying or prescribing in the codification section 1400, paragraph 101. And that is providing the basis, right, for line CA-52 in our model, which is that dark green. And we also have the lighter green, which are items that authoritative literature permits governments to report. So some governments are reporting depreciable capital assets and non-depreciable capital assets separately broken out. Beyond those reporting requirements that we were seeing in the codification in the authoritative literature, Some governments are also presenting more disaggregation in their capital assets than those minimum reporting requirements, both in terms of the line items themselves, right? So in the non-depreciable section, you might see a government reporting infrastructure assets or works of art, CA 6-7 in there, as well as reporting these capital assets gross or net of depreciation. So we're really looking to kind of incorporate that into our model to support the optionality of governments there. For now, just also wanted to note that the highlights that yellow, green, gap required, permitted, or observed practice are included for internal discussion purposes only. And as we move forward today, to ease our discussion, we're planning to explore each of these approaches to depreciation separately. So starting with the non-depreciable capital assets before moving to the gross depreciable capital assets and then the net depreciable capital assets. So we'll start with those non-depreciable capital assets. So the capital asset cluster is going to be placed in the government-wide financial statement module. That's shown on the right side of this slide with those columns. And in this case, this is just showing that it's indicative or applicable to the non-depreciable capital assets. After our initial exposure in the discussion memorandum, the project staff is envisioning revising and examining this cluster to place it in additional modules beyond those government-wide financial statements, and those currently appear grayed out on the slide. Also just wanted to briefly mention that codification section 1400, paragraph 111 is providing guidance for CA-7, which is those works of art and historical treasures, that they may be depreciable or non-depreciable. So again, this slide focusing on the non-depreciable display of that and component of that as well. Moving from there into our gross depreciable capital assets. So this model looks very similar to the non-depreciable component we just kind of looked at. And again, the application of this section, this component within the cluster, is contextual to that module's reporting requirements. Again, project staff grayed out portions of the line items, particularly for fiduciary funds, because we observed through that sample and through that observed practice just limited capital asset reporting in those statements. Again, we're looking at further review of this after exposure of the discussion memorandum in the spring. A few things to highlight as well from a line item or modeling perspective, that we've broken down those depreciable capital assets into both tangible and intangible capital assets due to some of that observed practice. And the section also does include one line item for accumulated depreciation and amortization. Again, due to observed practice, we'll walk through a few examples where kind of associating or tagging those financial statements just to see what that looks like. The other thing that project staff wanted to note on this slide about this module is that it doesn't include all possible line items. We looked at normalizing and trying to find that observed practice. So you might think of a government that has a line item that's an intangible lease right to use asset. And that government has a few options when they use the taxonomy. They could tag that under line CA-28, right, which is those intangible right to use assets, if they wanted to group all of their intangible right to use assets into that line item there. Or they could create a government specific line item, which we'll be talking about a little later today. So then the final thing to kind of look at from the model before we get to those examples is the net depreciable capital asset. Kind of the theme here, this model looks very similar to the gross depreciable capital assets model that we just looked at. The only difference here really is for the fiduciary fund statements, where we have that depreciable capital assets net line item allowed in white instead of gray, if applicable. And this is because of observed practice, particularly with public employee retirement systems. But again, after exposure, planning to come back to review those right-hand columns. For now, looking really at the government-wide statements. So with that overview of the application of the capital asset cluster to different modules of the financial reporting model, we'd like to now turn to a few examples of how governments could tag their financial statements to the taxonomy. These are all discussed in paper 1 and included in paper 1. But the first example is those governments that are only displaying the minimum reporting requirements. So just kind of the capital assets net of depreciation, those total capital assets in line CA-52. And so this is kind of a common, it's required, that this line item is required under GAAP. But we could also, as we discussed, have governments that break that total capital assets out into the non-depreciable and depreciable components. And so for those governments, they'd be pulling in line CA-9, CA-51 from the model, just to kind of relate and associate those in the taxonomy. From here, we get into that third set of the model that we looked at, getting into kind of the more specific line items. So these governments are presenting a significant degree of disaggregation on their depreciable and non-depreciable line items. Here, they could generally rely on the taxonomy defined line items here. And this example, we wanted to highlight it because it's showing each of those line items as gross, with the accumulated depreciation on one separate line there at the bottom. And then the final example is of a government that is reporting that's disaggregating their capital assets, but presenting them net of accumulated depreciation. So again, here, this is included in the model that we're presenting in this cluster, where they can pull the line items that are their net. So with all of that, we kind of teased it earlier, right? Our discussion today is centered around the reporting requirements and observed practice line items that the project staff has modeled into taxonomy defined line items. But it's foreseeable that governments may need to create their own line items for unique situations, and these will be shown as those government specifics. So the top screenshot here is an example from a government financial statement of a government reporting capital assets that are either not included in the capital assets cluster that we've shared today. For example, art in public places or other capital assets. We don't have prescribed line items in the model there. Or this screenshot also shares examples of capital assets that are included in our cluster, but that the government combined. So for example, land and construction in progress, we have those separately. This government is combining them. And so in this case, the government would create a new line item in the taxonomy in their reporting instance, and then tag that line item with the government created line item. Project staff is developing the specific taxonomy requirements for government specific line items, and those taxonomy requirements would include an approach that allows a government to associate or anchor their government specific line items with taxonomy defined user terms. The final topic to just briefly mention before I pose the first two board discussion questions is the idea of documentation. So the project staff's process for developing documentation was based on a series of assumptions as follows. So the first being the articulated purpose of the GASB's taxonomy is to assist preparers in expressing their financial statements digitally. The general conclusion is that the GASB taxonomy should not be designed to provide accounting or financial reporting guidance. And so it was agreed that the purpose of the documentation is not to provide a semantical definition of the term, and the purpose is not to provide scope limitations for recognition or measurement guidance either. So accordingly, the project staff avoided use of the recognition and measurement guidance in the documentation. We kind of reached the conclusion as a project staff. The purpose of the documentation is to assist a preparer in selecting the taxonomy line item that's most representative of their financial statement or their financial reporting circumstance. And to assist preparers in that manner, we sought consistency in our documentation while still ensuring that that documentation describes line items in a way that makes them distinguishable so that preparers can apply them. So with all of that, at this time, I'll pause and pose board discussion questions 1 and 2. Broadly, what feedback does the board have about the capital assets cluster? And does the board have any specific feedback about the level of detail included in the capital assets cluster?
Thanks, Christian. Remember feedback, questions, comments? Chris?
So first, I just wanted to share that when I first went through the paper, I struggled a little bit with it, but it was only because of it was only until I got to B and C in the attachments. So just a point for the future. I don't know about the other board members, but in presenting, as we think about how we present this and share this and educate, it's just important to try to think through how people might think. So those definitions and some of that guidance that was in B and C was so important and would have been good for me to incorporate in, or maybe that was a first paper or whatever. Whereas usually I could read a paper and then the attachment, I could read that afterwards if I need that additional guidance. But in this case, at least for me, I felt like those two attachments were so integral to my understanding of the paper. So that's just a point, not a bad thing, because we got all the information in, but it's just a matter of how people digest it. But then when I went through B and C, everything just clicked and it made so much sense. I have maybe a very silly question. So the color coding that we use here helps a lot. Is that going to be included?
So when we had the discussion when we were the reporting model. It was a suggestion that the board provided that we were color coding, for example, for the headers, right? We had dark blue for required, light blue for permitted, and we had an orange color for government and entity specific. And I think it helped an awful lot the dialogue and to be able to understand why certain data model components were flowing the way they were fixing. We have found since, or at least this is just my personal perception, as we start working through the line items, that the color coding becomes more a nuisance than a help in the sense that it's very nuanced. Okay. So if we switch out of the taxonomy for a split second and go back to a very technical accounting debate, do you believe that the disaggregation between depreciable and non-depreciable is permissible? Or is it required when applicable? And so that was the hard debate, right? And so in here, we have shown the depreciable and non-depreciable as if permitted but not required. But the reality is, if the depreciable and non-depreciable amounts are substantially different, which is how the guidance says, then you have to disaggregate it. So the guidance actually permits aggregation if they're not sufficiently different. But if they are, you're supposed to separate them. And so are they really light green or are they dark green? And then you start going through a lot of permutations. For example, two really interesting in here. We have yellow, things like, let me pick on one of the ones, work of art and historical treasure. We have them as light because the reporting requirements do not specify that they need to be shown separately. But we have very explicit guidance about the recognition of those things, both as depreciable and non-depreciable works of art and infrastructure. Similar issues with infrastructure. We have the modified approach and we have very explicit guidance, but we don't have explicit guidance about to disaggregate them in the face. So then we wind up having all these really nuanced debates about what should be the right color. And so it felt to me at this phase of the development that maybe the color coding has live its useful live conversation, and maybe it's an opportunity for us to, we spend an awful lot of time trying to get to it. Another point of, I think, interesting feedback in here is we spoke with the TCG. I think you guys know that we had our first TCG conversation and they showed to them the reporting model. A lot of really interesting feedback, a lot of good discussion. One of the pieces of feedback was, oh my God, this is awesome that, the color coding, communicating required, non-required, they were just jazzed about it. Can you put it in the taxonomy formally? Can you put a field in which you actually identify the line item as such? And I'm like, oh, great idea. Well, think about it. And so clearly it's a useful vehicle of conversation because it allows us to think through the modeling. But then when we have to make a representation of the taxonomy as such, it becomes very difficult. It became very nuanced and very difficult. So for the moment, we're using it as a ways of communication. But my personal view on it is it has become a struggle because of how many people hone on to it. Oh my God, this is awesome. Can you keep it? And what is that going to communicate? What are going to people rely upon in those decisions?
That's fair. And we've always said from the beginning that this is not authoritative, right? And so that makes, I completely get that. So outside of that, as far as the descriptions and some of the questions in the paper regarding that, I just think redundancy is good, at least for me. And so the more, the merrier and the better. So I'm going to fall on that side and be okay with all of that extra information in there. And then to the codification referencing approach, I think it's reasonable, and I support what the staff is moving forward with.
Thanks, Chris. Jeff?
So the first question is broad, right? And so as I think about capital assets, what I noticed, right, is the visual you put up there that really the requirements we have can be boiled down to one line item. So you could have one line item. So when I look at attachment B and all the items there that are all described, I realized the challenge for staff, right? Because they're not, the guidance doesn't tell you what all those line items need to say, because we only have one line item potentially required. So I recognized the efforts the staff had to do, and it looked reasonable to me in coming up with this approach. The next question was specific. I had a couple of specific things. One was when I look at attachment B, and you talked about the works of art and historical treasures, right? And I looked at your description there, and I said, wait, because you cited it in the paper. I said, wait, looks like we actually have authoritative guidance there. And you didn't take the entirety of the authoritative guidance there for works of art. And so my question was, Paulina, why didn't you do that, right? You actually had one where you didn't have to make it up. You had it. And why didn't you do it that way?
So this is probably the hardest piece of the conversation. And so I think the historical works of art is only one. You have infrastructure, you have improvements to land. There were several examples. I think we even identify a definition for software in progress in 96. So when we started this process of putting the documentation together, we started there exactly. We lifted and dropped it. And then we looked at it and went, oh my God, this looks like 5 people from 5 different planets wrote it. And so we were really challenged with it. And some of the definition guidance also includes recognition guidance along with it. And so it became very difficult to parse out what to put and what not to put. And some of the definitions are paragraphs long. And so as we struggled through these, we thought about a potential approach where we come up with a very consistent syntax of selecting specific characteristics and work through them, as opposed to keep the authoritative definitions. But I think that's a very important point of feedback of the board. If this approach is not something that you find acceptable for the documentation of the taxonomy, if the board believes that we need to keep the 5 definitions from different sections of the guidance, and then only fill in the sections in which there is not authoritative guidance, it's a very important piece of direction that I think we're seeking in this discussion. Even though it was not posed as a question, it was one of the hardest pieces in the discussion. So we wanted to explain how we got here, but definitely we need your directive in terms of, no, we prefer you to stick to the authoritative guidance and then fill in the blanks, or is the syntax approach with specific characteristics what you would like to see in the documentation?
Right, because on page 3, right, you excerpt the historical works of art guidance, right? And there's an A, B, and a C there. And I looked and I saw only basically A was only in the attachment B. And I'm like, well, don't B and C matter? And so this is where I'm sort of struggling with the question that you're asking, because part of it is like, I don't, or do we want any confusion or whatever in terms of, is what they're saying in the taxonomy mean that B and C don't matter? You know what I mean? Like they're being inconsistent, or are we bringing in too much by bringing in B and C? And I don't know that I have and part of me wants to be consistent, but I recognize that,
When you
that could
say
be a challenge.
consistent, what do you mean?
Bringing in B and C.
Consistent with the authoritative guidance,
right.
not consistent
Where we have
within the syntax or whatever
Right.
of the taxonomy.
Consistent consistency with the authoritative guidance where we have it. In other words, those 5 different voices, do we just take the 5 different voices because that's what we have in authoritative guidance and then fill in, like Paulina's saying, fill in where we fill in, or do we allow for some syntax consistency throughout and adjust what that guidance says?
Yeah, I will say when we started this project, it's almost one of the reasons we believe we're the right person to do this project was because we wanted it based on our authoritative guidance. We didn't want somebody else creating gap. A derivative of that is we don't want this creating pseudo gap. And we've been concerned with that. And it feels like we're drifting away from that kind of foundational premise of why we're here if it's not, when it can be tied pretty strictly to the authoritative gap. I get that it might sound like 5 different people wrote it and the structure is going to look really different because the definition for X was created in 1995 and the definition for Y was created in 2022. Our preparers, our stakeholders deal with that now because that's the authoritative guidance. Like that's what it is. That's the nature of 40 years of standard setting. And to me, at least as a board member, we don't necessarily deal with governance and I don't exactly know who's going to approve this and all that stuff. But to the extent we're involved as a board, getting back to why we think we're the right person to do this project, for it to not be tied when it can be, I guess as a board member, kind of bothers me, especially sitting through, how many times have we discussed the infrastructure definition over the last couple of months? At 3 different, it's taken us 3 meetings at least to get to a definition for infrastructure, and every word in there matters and the order of them matters. And there was a lot of thought put into it, and for it to morph here for whatever kind of reason, because it sounds better, it sounds more consistent with the other ones. I don't know. That kind of, as a board member, bothers me. Having said that, I also agree there's still going to be some art, because at some point you can take it too far to where I have to put everything about infrastructure, for example, because we don't have glossaries in most cases. Some cases we do, but it's pretty rare. So we sometimes, and I think you said this, we embed recognition and measurement principles within the sentences that might consider to be the definition or the description of what that item is. And that's not makes sense. We can't bring all the recognition and measurement guidance into it too. So at some point, there's probably some art to picking apart some of them when that's embedded in there. And so it's not going to always be word for word, but to the extent it can be, it seems like that should be the objective to me, as opposed to trying to make it sound like the same person wrote all the things.
2 things that I would like to see clarification. So as you continue to provide feedback, it would be helpful to also think of the additional issues. Also in authoritative guidance, when the board develops definitions, sometimes you hone in some specific characteristics depending on the asset. For example, as we were dealing with intangible assets, it's highlighted its non-financial nature. Well, all the capital assets are non-financial nature. And so when we are introducing, then putting back the authoritative literature, and the characteristics of the definitions of the line items are not consistent in the characteristics, how do we think about when we're filling in the blanks of the things that did not have? So that's sort of one of the thoughts that would be helpful to hear your thoughts on it. And then the other thought is, just for the sake of knowledge and informing the opinions, not necessarily a decision-making issue. A part of the syntax structure also had to do with a desire to conform with an XBRL style guide. For example, amount of, description of, or some of the ways in which this is expressed as a style guide. If we go to authoritative guidance, we would just maintain the GASB style as part of the way we're working through those documentations. So just 2 points for further feedback, if that's okay.
Thanks, Paulina. Jackie?
So I like what you did. The non-authoritative part doesn't bother me because they're not using this to recognize and record and report transactions. They're using this to tag what they've already got. And a lot of times it's probably not even going to be the people that did the recognition in the first place that are going to do the tagging. They're going to go out and find a vendor to tag for them. The vendor is going to be looking for something. They've got this. What do I find that matches as a tag? Where can I find that? Does the description in the tag kind of look like what they've got so I can tag them the same? That's what they're going to be doing with it. So it doesn't bother me that we don't have the full definitions in here, because that's not going to be what's driving how it gets recorded in the first place. Maybe we don't call them definitions because they're not. Maybe we just call them descriptions or something like that to get away from that kind of idea or something. But I do believe it needs to be shorter, more. Let me find it. Because the tagger is not going to go, okay, I got 4 pages of definition here. Let me read this and see it. They're not going to do that anyway. They're just going to look for what matches what I'm trying to tag here. What do they have that'll match? So I like the format and the way that you did it and the way that you presented it. Yeah, it bothers me that we see a bunch of non-authoritative in there, but the reason it is because you kind of cherry picked the information out of there to get a description that would kind of align with the full-blown definition. So the tagger would at least be able to identify, yeah, this is what I need to use. So that doesn't bother me as much as it does the rest of the board members, I guess.
Jackie, if we saw infrastructure after, let's say we issue final what we did yesterday, and these words were different than what we did yesterday, that there was that one paragraph, because I would argue that component, all of that part, I don't know, maybe not. So it's even 2 paragraphs. It's still kind of short, but they just put something different in here. That, you think that's okay?
So here's what I envision would probably happen. That the tagger is probably not even going to go look and see what the description is, because they're going to say, okay, the preparer identified this as infrastructure. They read the definition. All I need to do is find the tag that matches it.
But in there,
By that argument, we don't put any of this descriptions in here at all.
Well, in some cases, they probably won't use them, but in other cases, they may be nuanced in that the preparer didn't use exactly the same words as we've got in the tag. Now they got to see if they can find something that'll align. Do they have something out there that kind of seems to fit with what the preparer called this? So they're going to go out and look, and then they'll start looking at the descriptions and say, which of these descriptions aligns with what I've got sitting on this financial statement? Now, the people that are preparing over here that have worked on this can probably know better if that's what's going to happen, but that's based on what I've observed and what has been discussed in the other XBRL meetings I've been in with the vendors that do the tagging and stuff. I kind of think that's the way it's going to happen.
I think there's an assumption there, though, right, Jackie, that in all cases, the tagger doesn't know anything about the accounting, and the accountant doesn't know anything about the tagging. And I don't know that I can get to a place where I can say in all cases, because I could see cases where the people doing the accounting are going to do the tagging. It may not happen a lot. And now they're going to be looking and trying to understand the tagging, and they're going to say, that's inconsistent with how I did the accounting.
So I disagree with you on that, because if they are the ones that are doing the preparing and they're going to do the tagging too, they're just going to go look for the words they want and tag it. The other thing that I would mention or indicate with that is that even if they do that, and if they have questions, they would probably come back and ask. My guess is that the SEC XBRL tagging that's going over on FASB side there, they're not putting full definitions in either. They're probably putting in, look at this, can we live with this? They put it out for comment and stuff before it goes in, but I'm pretty sure they don't have full-blown definitions either in most cases.
So I think they have somewhat of a mixed situation. Also, some of them are authoritative because they have a master glossary in their in the qualification, but they face a similar situation when there's nothing. But also, I can the SEC published because of the FDTA, they're required to publish every 6 months a report of the status of use of XBRL information. I'm gonna quote it. I'm not going to quote the precise number, but it's over 90% of the public traded companies outsource the tagging. I can provide you the research report so you know with precision how it was done in the private sector. Doesn't mean that I don't know how much I can infer or not that the governmental entities would do something similar, but there's just pieces of information. And so the reason, as you asked the question initially, Jeff, the reason why we had done what we did to shorten and summarize the descriptions, we call them documentation. The documentation of the line items were intended with that mindset. Is the only purpose this should serve is to help somebody select between leasehold improvements and works of art and historical treasures. That's all I'm trying to help them do. But so that's a very important piece of where again, we're seeking the board's direction on that.
Just a quick question. Is there any use of these tags further down the line by the users of the tag data?
The users will be able to see in so the way that the financial statements, when we catch a break, I'll show you a live presentation of it. The financial statements, you can open the box. Let's say you hover over the line and improvements, and the description would be included in there as well as the definition. So anybody reading the financials would have access to it. But once it gets standardized into a relational database, what they use it is to standardize into their system, and that description disappears.
Maybe it's a distinguishment between us and how the FASB operates, but the FASB itself doesn't approve that the SEC does, right? And we don't know what our governance is, but as a board member, it bothers me more than it bothers Jackie for them to be different. And to kind of get back to your other questions, the missing characteristics one part is where maybe some of the art comes in a bit. You almost might have to see specific instances because there are parts of it where I could see maybe the board didn't fill that characteristic in intentionally for some reason, and so you filling it in would seem counter to what the board intended, and other times it might make more sense or be missing something if you didn't. I guess I don't think the objective, and this maybe gets back to the style guide, I don't think, again, the objective to me is that this document stand alone and I don't want to say look pretty, but read pretty and read like it's the one person as much as it should reflect the guidance that may or may not have been done by 5 different people. So that's kind of back to your style guide. I see it now in capital assets what it says amount of. I didn't bump up against it, but this comes to the MD&A one, so I'm getting to that too. But I did bump up against it with MD&A was description of, which I think it started with, and it just didn't even make sense. It's certain, like for the capital asset activity or the last two, the current known conditions, it made sense. It flowed, but for the overview and the others, it kind of was weird to have description of, and it was like we were trying too hard to make that syntax be the same. And even amount of here, isn't one of the characteristics kind of underlying it that it's a number? So isn't it already by nature an amount? So do we need amount of? And the amount of feels like it's another version of, we're just trying to make them all look the same. And in my view, unnecessarily, but that all kind of stems back to, I'm okay with this not looking like the prettiest or most perfect or most readable document, as much as it should be reflective of our guidance as much as it can. And I guess back to Jackie's, and then I'll let you. I think that there's not going to be a 4-page description of it, because then you're putting in, but it is the art
I
of
might have exaggerated
all
it there.
the recognition and measurement stuff there's going to be art to pulling that out so that you don't end up with 3 paragraphs for a lot of these things and just honing in on the definition. And maybe I'm, rose-colored glasses that, yeah, it's art, but you're going to be able to pull that out and retain the nature of the words that are in the guidance, and it be limited to a description or documentation without having all that recognition and measurement in it. But that would be my hope. Jackie.
I don't know if this is possible because I don't know how you're exactly setting it up and what space you have, because I know that becomes a constraint sometimes when you're working with these kinds of things too. But how about, has any thought been given to, instead of coming up and putting the definitions in there, doing what you've done and then put a parenthetical for more information or additional information C, and then put in a COD section? Something
So
like
the
that.
codification section is a requirement of the style of the design of the taxonomy. So we have just not shown it in here because we want to show the codification references with the latest. But so the way it would be presented, so for example, for the exposure purposes, right? So it would be a combination of, as Chris alluded to, B and C put together. So you will see all the line items in there, plus the documentation, plus codification references. And we normally have, I think we have like 3 sections of codification references that we're alluding. And so there would be more than the ability to provide of more than one reference. And so in there, what you're trying to do is help, if a preparer is working through it, oh, I don't know what this is supposed to be, or I don't recognize the line item, then they can, in one way, one world, the taxonomy also has a link base. So you click the link of it and it takes you to the codification and you can read it. And you can see what is the recognition and presentation, whatever the provisions there are associated with this thing that you're reporting. And so there's a lot of connectivity that would help the navigation.
I had forgotten about those, but yeah, I think that kind of gets to Joel's concern too, that they can go farther and deeper and get better, more detailed information than the one-line descriptor.
Or that makes me think about, whether it would be a way to, we're calling this thing documentation, right, for lack of a better term, right? And I'm thinking, well, if we're going to have the site available to the actual codification, that what we call this thing is make it a little bit more summary descriptor, or call it something that you couldn't interpret it as this is meant to be the guidance. And if you did summary descriptor, which is what it is for descriptor purposes, and then you have the site, I don't know if that helps you, Joel, because then we're not claiming that this is what that is, and we're making it clear this is not the guidance. The guidance sits over here in the next column or whatever. But the COD.
You'd have to take the authoritative, non-authoritative little thing out of the front of it,
Right,
right?
because the whole premise would be this is non-authoritative. This is summary for descriptive purposes to do what we're talking about. This is intended to do. It is not intended at all to be and so you could, when it's clear and concise in the current guidance, you could bring in the current guidance. You don't have to rework it when the current guidance works perfectly, right? But when it's like a lot of the cases, it probably doesn't work perfectly, right? And you can do your summarization and feel fine because it's summary descriptor.
But that's what I was trying to not convey, that the current guidance is perfect or not perfect. That's not the purpose of the conversation, but it's the reason that the board put so many words in those definitions. It's purposeful because you're trying to limit the set of things you want to follow in this bucket, right? So then you can prescribe accounting treatments or disclosure requirements. And so you have to be very deliberate with the characteristics you're selecting. When we're doing the taxonomy, all we're trying to do is help whomever is picking the tags, trying to figure out whether I want this tag or that. That's all we're trying to help them. And so that's the reason why we started this way. But again, we don't want to assume that that's the right path forward. That's just where we are. The papers that we have presented today, does this mean that?
How about, for an example, Paulina, something you just said triggered, like leases. We describe leases in our world to mean this. And we did it to be form over substance, right? To like, if you have one of these things, doesn't matter what you call it, we call it a lease. And so just because they have a lease or something they call a lease, it may or may not be a lease in what we have defined a lease. But if you somehow use different words to describe it other than the form or substance that the board determined was right for Statement 87 to have leases in our world be these things, then you're missing that meeting. You're losing that
And I think that
board
is,
determination.
I mean, that's kind of the issue where I think Jackie is expressing, which is the theoretical approach. And we have talked about the point in which this come into play for a preparer. A preparer is going to wake up the next morning where there's a digital world and continue to prepare the financial statements in the same way they have. So they're not sitting here trying to figure out whether they'll have a lease or not based on the tag. They have identified a transaction statement in the scope of Statement 87. They have applied the recognition of provisions guidance. And now they're faced with this conundrum, which today doesn't seem to be a conundrum. They want to separate them. I was teasing the TCG and they got a little concerned about it. A lot of people implemented leases, decided to disaggregate that line items. So in government-wide, it's very prevalent to see only two line items, depreciable, non-depreciable. Now there are three, depreciable, non-depreciable, and intangible right to use. And so when they're doing this, they're not sitting here trying to figure out I already have a lease, I put it on the balance sheet and an intangible right to use. Now I'm trying to figure out which one of these little tags I need to associate it with. And so I understand your concern, but the reason why we thought the way we thought of is people should be even if they're preparers or auditors, the ones doing it, they're faced with this exercise at the end. They have a set of financial statements prepared. They're just trying to merge the digital version to the paper version. And so I know it's a style and a requirement of the taxonomy to have codification references and link bases to the codification. But the reality is they're not, at that point, a preparer should not be in a situation or in a junction to go, do I need to represent this as a discounted value or fair value or historical cost? That should not be the question. The question should be which one of those little things I need to use.
So does this become a current text, right? We used to have, or I don't know if the GASB did, I don't think, but this is old, but the FASB used to have a current text, right? That they maintained that was a plain language version of their guidance. They stopped doing it, right? Because what's authoritative? And the things that come out of this organization are authoritative. And we're almost creating a different version of a current text by trying to use plain language or whatever that may or may not be reflective of the words we chose as a board. I don't know. I get that in some way we're having to do that because we don't, the line items, and to make this worthwhile, we've got to address all these things. And so there's going to be some, and my world's still identified non-authoritative, but maybe that's not the right approach. But the way I think about it is by necessity, we're going to have some non-authoritative stuff in here and we need to appropriately label it. But when something we've addressed authoritatively, I still struggle.
I'm not objecting to replacing our standard simplification syntax to authoritative guidance. That's the direction of the board. We're happy to do whatever the board directs us to do. I'm just trying to explain the way we landed here. And the way we landed here is because we believe that 95% of the people do not send it to a vendor, and the vendor has no context of accounting and financial reporting the way we do.
And 5 years from now, it's going to be a machine, not a vendor, that just does it right and learns it from whatever.
It learns it
Volume or not,
from
right?
chomping through prevalent practice in their line items. So they're going to be fed 30,000 ACFRs every year.
And our literature and whatever it is we put out with this thing, right? So, Jackie.
So the whole taxonomy is non-authoritative. So there's nothing in it that's authoritative.
We're very careful, like with anything we produce, even if it's non-authoritative, if it's staff-driven or whatever, that we're conscious of it, that it doesn't contradict our guidance.
But I don't think this is contradicting it.
If we spent, I don't know, 15 hours on an infrastructure definition and they put a different description of infrastructure than we spent 15 hours on.
But it's serving a different purpose. You know, what we did is important, it's critical, and it had to be done. And it's the right, it was right. That's what's going to drive the recognition, the measurement, the recording, what goes in. The tagging is not going to drive the recognition, the recording, the compilation. Tagging's not going to do that. It's not.
Then why, I guess, I don't know, we're going in circles now, because then why put the documentation in there at all? Just let it have the COD reference and the label, and people they're already just trying to find the right label that's associated with the thing that's on their financial statements. But
I mean, I think the thing what we originally started with, right, Pauline? I think this historical works of art to me is a good example of it, because you can look at the excerpt on page 3 and go and look at your description and B isn't there. So I sit and go, well, does the fact that it's preserved? They said preserved was important. Preserved isn't there. You know, C is it's got to have a organizational policy. They said in the guidance, organizational policy is important. It's not there.
But,
right. So,
But this
so
is
like,
where-
as far
but
as
in that
to
scenario,
me,
you're trying,
that's contradictory.
but in that
Jackie's
scenario,
saying that's not to me, that's contradictory, right? We may do other reasons for doing it, but I view that as a contradiction.
I mean, I guess, again, not to argue the right or wrong, like Pauline is saying, not to argue the right or wrong, but you just try to make that just documentation, you just try to make that authoritative.
So, yes, but there's a bigger challenge to that. So stick to that idea, right? So we will take that entire paragraph and we lumped it and we put it in there. So now we have, like Jackie said, a four-page description. It's fine if that's the board's directive, it's fine. The challenge is, I think you are, sorry for this, oversimplifying the art aspect of fishing out description and recognition. I believe those are recognition criterion. I think that is what is helping you determine whether you should capitalize or not those line items. Because the guidance doesn't require you to capitalize. It encourages you and then gives you these parameters. But then are they definitions of what a work of art is, or are they the characteristics that yield the recognition conclusions? And so that art of fishing out what characteristics should be included in the documentation or not becomes really difficult.
Yeah, but again, if I'm trying to understand, if I'm looking at the number, which is what the exercise here is, understand the number, doesn't those descriptors help me to understand what that number is? I understand they help you to
As a user?
yeah.
But
Because
you
I
don't
have-
have it today. So if you read a set of financial statements today, you see a line that says work of art, historical treasure, $10 billion. You have nothing.
Yeah, but what are the basis of how that number is determined, right? How that number is determined
But
is
in
based
today,
on
in
the
paper,
guidance.
you don't have that. In your paper financial statements today, you don't have that.
Well, yeah, I have access back to the guidance, right?
You actually have less access back to the guidance with the paper version now than you will with the tag, because the tag, you can get the codification and go right to it.
Yeah, well, that's what I'm saying. But that depends on how you view, that's what I'm saying. I'm starting out more in Joel's camp than in your camp. But if I get to a place where this documentation column isn't attempting at all to be the guidance, for that, you have the codification. And if we make it clear that we are not, there's no authoritative, non-authoritative descriptor. And we make it clear, however we call it, there's a summary descriptor, then I can get more to your place, because now I can say, don't misinterpret what that column means. It's not the guidance. You want the guidance, you go to and in fact, yeah, it's easier than you have it today because you have it right there, whereas now you got to go find it some other way. But if we continue to call it documentation, then I'm more in Joel's camp. I'm like, hey, we're just attempting to be a description of what this thing is, but we're only taking part of the description.
We're throwing a lot of words like they're the same. Documentation, description, definition. Those aren't all the same words.
And so we had agreed
We've talked
historically
about-
in the past, the definitions were not going to be in the table because we don't want to have the semantical meaning of blee, blee, blee. I mean, I don't know how to define land. I'm sorry, that was hard. So we couldn't come up with a chunk of earth. It was very hard. So we had agreed that definitions were not the right way to go about it. Documentation is how we settled to be able to describe the narrative plus the codification and eventually one day the link-based reference. But the piece in here is a little more up to you. How do you want to go about it? And like I said, whether you want to keep this approach or go back to putting the specific authoritative materials, happy to comply with whatever the board direction is.
We don't have board decisions, so it's kind of feedback. I don't know what, if other board members have thoughts, happy to hear them, but I mean, I would, if we're gonna go down that path, I would just leave the COD reference in, don't even give them any description, and just, the label is the label, and there's the COD section if you want to go figure out more about it. And if there's no COD reference section because it's a practice, observable practice, this is observed practice, man. Pick the best one.
I think in this one, the observed practice is easy because all would tie to the same, capital asset section. But when we start thinking about receivables, that's a little harder because the receivable guidance it's not like we have a section of receivables. And so it's a little bit harder to work through. And so you would have line items with potentially nothing.
So there are some governments that are actually doing this kind of thing now, right?
We expect, I don't know that they're doing it right now. I think if you
Okay.
have experimented and piloted, we're aware that very many large governments have the softwares that are used to be able to do this, so they would eventually be able to enable to do themselves.
Okay, so I was just wondering do we have any kind of samples out there from governments that like to better understand the logistics of how they're doing it? Is it the way Jackie described or?
So what we have today is the work that Experial US has done. And in those cases, they have partnered between the issuer, they call it the issuer, the preparer, the government, and a technology company. And so they have developed samples. And so that's what I was going to pull out in the break for you to see a sample, how that looks like. It's based on the Experial US GRIP taxonomy. And so you can see there how I can show you how it shows in the digital format, the line item, and then the tag. And for example, one of the interesting things is they're not 100% aligned. And so Christian put the example of the intangible capital assets and the leases, right? One of the examples that we often find prevalently is receivables and due froms. Are they different? But if you call it due from customers and the taxonomy only says receivable from customers, that's the same thing. And you can have that. And so the human version says due from customers, and the taxonomy behind says receivable from customer, and then the codification reference is somewhere. So I'll be happy to show you, but the way we have seen it today in this experimental format has been this partnering between Brian Caputo. They're publishing every year that way already. So in their website, they have annually published their digital financial statements. Well, now he's
So-
gone, I don't know.
So like with Brian or any of them that we can actually identify, are they using an outside vendor? Are they doing this tagging internally? How does that work?
So we have seen it both ways. We have seen governments that because they have a reporting tool, they can do it themselves and then they can keep doing it. We have seen it with vendors. So we have seen it with both.
Diane, is your point to see what descriptions did they use or whatever? Or
It's kind of that, and to better understand like real life examples, like, okay, so if they're using a vendor, the vendor obviously is not the accountant. So they don't really care about if it's authoritative or not as far as the description, and I understand that. But if it's done internally, and I would feel like with governments, it's probably going to be more internal because of the financial aspects of contracting things out. But if they're doing it internal, does it matter to those accountants if they're the ones doing the tagging, if it's the authoritative description or if it's just a summary description, if they've already done the recognition and all of that? So I'm just trying to better understand like real life government examples on how this would work.
Well, I think real life government examples are, there's either the taxonomy they use is some standard chart of accounts in Michigan or whatever. And so they already have all these descriptions. That government, as it's reporting, has already probably used those descriptions. So it flows easily for them. Or if it's like Brian or when Alan tagged George's Act they used the XBRL GRIP taxonomy. So they had XBRL descriptions for the things they tagged. And if you hover over their thing, the XBRL description comes up. And that was part of the point to me of us taking on this project, was we didn't want somebody else creating those structures, those descriptions and things like that. But I don't know, it's like, well, now we're doing it. And when you look at, say, an FTTA, right, that the GFOA and other organizations like that are very supportive of us doing what we're doing. If they're ever married with an FTTA, they want the SEC to work with us because they don't want to learn new terminology. They don't want somebody else determining what pension obligations are or whatever descriptions are. They want it to marry with what they know, which is our GAAP. And so, I mean, I get that there's art in it. It's not all science. It's not, because that's not how we write standards. We'll have descriptions for everything, but it's hard for me to create something that says something different than what the standards say when the standards say something about it, kind of for all those reasons, the whole reason we're doing it. But
so I guess it's, in my mind, what we want to get to is what I've always thought that we wanted to get to is that this is going to result in financial statements that are in accordance with GAAP. And so is that not what we're trying to get to?
That's kind of the point that I think we're arguing right now, because like I would argue this has nothing to do with that.
Agreed. I'm so
Nothing.
sorry to jump in there, but yes, that's not. So the taxonomy has to enable the reporting requirements of GAAP, but it cannot as Jackie said, the taxonomy is never authoritative, so it's not providing guidance. But it also, we go into the other modules, if we get time to discuss the other modules, you're going to encounter situations where the design of the taxonomy will not prevent you from non-GAAP reporting. So there could be circumstances in which a preparer can be a little bit wickety-wick and do something bad. And because of the design configuration of the taxonomy, they may be able to do it. And so we're not guaranteeing GAAP reporting, and it's not intended to enforce or develop GAAP reporting. Is enabling through existing guidance to report in accordance with.
And I did say that wrong, because that's what I was looking for, is that enablement of being able to produce through the taxonomy a GAAP in accordance with GAAP. And so, no, I'm not assuming that this forces that or anything, but enables that. So I guess in my mind, in thinking about where we're at now in this summary, if everything has been recorded in the system in accordance with GAAP and in accordance with the GASB requirements, then I don't think it matters to me what the summary looks like if that gets them from the accounting system into this taxonomy and enables that. So if I'm understanding this correctly.
Just as a thought experiment, we often tease in the design of the line items and the configuration. This is what I have always teased about the line items. And I told you at the very beginning of the conversation, for us, it was foundational and critical to get the reporting module components. And that was, for us, such a big focus. Because when it comes to the line items, and some standard setters have done it and failed miserably, but they have created taxonomies with essentially you can do the net position with 5 line items: assets, liabilities, defer inflows, defer outflows, net position, go home and close door, and go home. And then every single line item is government specific. And so that is an avenue, and it hasn't gone too well because then what you do by having taxonomy provided line items, which is what you're doing is providing a hopefully a large group of government to coalesce around those tags, not changing the reporting in paper, but coalesce around those tags. So when the data is extracted and machine readable, it has that consistency. And then if they don't find something in there, then they should go to government specific line items. So people have experimented and it goes that way. And so that's why I tend to think of the line items more as an avenue to provide a vehicle to standardize issues to the extent that a government can and is able to identify a defined line item. So that's how we think of that piece of the taxonomy.
I have unrelated items too. Go ahead, Jeff.
Assuming that we've talked through that thing as far as we can talk.
I mean, if I were them, I wouldn't exactly know what to do with that, but we don't give.
Seems like no consensus.
We don't give board decisions here, so I guess you have feedback from some board members who kind of disagree with that at this point, and some that agree, and some that were in between.
The other item I had was, it's actually on the screen now, and I asked Paulina, so in that left-hand box, under depreciable capital assets gross, right, near the top, we have a few line items: buildings gross, buildings improvements gross, buildings and buildings improvements gross. So I asked, I'm like, gosh, does our guidance really allow it to be, that's the same information, right, produced two different ways? Do it as two separate line items, do it as a combined item. Do we want to do it that way? There would be nothing lost if we just went with the first two line items, right? Because you'd still get the information. And so, but this is a simple case, right? And Paulina, this maybe brings up maybe potentially more complicated cases.
Yeah, this is a great question in the design. And so we left this permutation, but we had a few more in here. And so for this cluster, we just kept that one, but they're very difficult taxonomy designed line items as we move forward. Let me take you to two of the hard examples where this permutation of single and combined, we call them the combination issue, eventuate more. State governments reporting programs and activities. Every state combines things in a random, difficult, weird way. Some provide some very straightforward programs and activities, and then it gets a point where there's these combinations that you're like, whoa, what do I do? And so when you start thinking through the data modeling, some of the original thought that we have had at this moment is let's just keep the single line items. So building and building improvements. Cool. And if you want to combine it, then you would have, Christian alluded that we're going to do government specific, and the government specific configuration allow, and I think you had a question of that, allows you to then ping to anchor those government specific to one of the taxonomy defined items. We're still working through how to create that configuration. So we're still in the process of going, but essentially creates two data tables: the taxonomy defined list items, and then the government specific line items, which is essentially a blank table where a government fills out, but then they relate it to the taxonomy defined. So when the data extraction happens, they would know that, oh, this is a version of buildings, right? So if you have building and improvements, it's a government specific and not here, then it would ping back to either buildings and improvements gross. And so then the machine would be able to know, oh, this is one of those. And so it would know how to aggregate and combine.
How would that work then in practice, right? So then if I'm that government and I do building, so say I'm hearing you in that world, right? There is no buildings and buildings improvements line item given for them. That would be a government specific creation, yeah?
The other way around. So what the taxonomy would do is have buildings, gross, improvements, gross. But if you want to have buildings and improvements, which is a combo, then you create your government specific and ping it back to buildings.
Right. So in this, if we had that design thing, this visual would have one fewer line item because it wouldn't have that thing. That would be a government creation, right? And so what would I do then? I would put in my financial statements show it combined.
Yes.
So would I then,
Combine
I would
it
just
and use
create, I would
government's-
just
Yes.
create my own, tag it to that number and then somehow relate it to empty, because I didn't fill those in, right? The empty line items of buildings and buildings improvements.
Yes, and so structurally would know that it's part of buildings and improvements. But
Say
to
that.
make those decisions of pinging, we still have to work through.
You anchored that to CA 13, 14, or 15?
We haven't worked through that.
Because it feels like, and that's fair, and I'm asking, I kind of knew that, sorry. Because it feels like one thing is to ping it to 13. It's very different if you ping it to 14 or 15, right?
It's
I'm talking line items on the table if people can't see the screen,
So
sorry.
it's a design configuration
Right.
and it's
Shows that
more
anchored, not pinged.
operable to anchor it to C13. It's a lot harder to anchor it to C14 and 15. But we're still working through the configuration, but that's fine.
I'm going to ask the same question, and I think I know the answer, but really quickly, let's look at CA21. Let's say I broke out vehicles and equipment. So my government has vehicles separate from equipment. They could create their own tag for vehicle, they create their own tag or line item for equipment, and they could tag it or ping it to CA21, or you're still working on whether they could do 21 or they would have to do 12.
CA12, right.
They would have to do 12, you think? Or you're still working through
We're
whether they can
working
do.
to identify, but the most operable way are the higher degrees of indentation. So the bold line items are more operable. If you want to ping it to very specific line items, it becomes very messy very quickly
Okay.
because it can ping up or down. And so we're thinking about how to ping it and whether we ping up or down or.
Yeah. Are you finished, Jeff? Because that kind of tangents into my question. So my question was, to me, almost a little more interesting than the line items you decided on were the white things you decided on, those buckets, the CA 11, 12, 13, in particular, like tangible versus intangible. You decided to create a structure where those are separated and are pingable to them, right? For something. I get 104 does that, right? And that's a disclosure, and this is line items on the financial statements, and those two, if I'm remembering our past discussions, don't articulate. Like we can't do that because those are separate, whatever classifications,
Agreed.
buckets.
And the problem that we run into it is this is why I was teased. So I made a comment to the tag and the tag kind of freaked out a little bit on me. I said, my pet peeve of reporting of leases. And they were like, why are you freaked out about it? We see during the implementation of leases that people have depreciable, non-depreciable of intangible right to use. And you're like, they're not the same things. I mean, is Elmo not the same thing? And if you are going to segregate for whatever reason you decide that's appropriate for you, you should indent the intangible right to use because it's a type of depreciable capital asset, but they put it at the same level. Notwithstanding those issues, because we saw that this was a prevalent issue, we wanted to, it's practice, right? And so how do we create a structure consistently for people to put their leases? And there's really leases. We have seen it most segregated of leases in SPIDAs. We have not seen yet PPP segregated, but it wouldn't surprise me. And so they're doing depreciable, non-depreciable, and the intangible right to use in more detail on the face of the financials. They're doing that today.
Okay. It was just interesting to hear why you did it that way, because to me, those are the most interesting choices because that creates the structure, that creates the nesting, the hierarchy, and what things people ping to create even more consistency or comparability as users move up in the structure to get like things when governments have all their own weird line items that may or may not be the same. That's going to be really interesting. Like when we get to receivables, what are the white line items? I keep calling them the white. What's the right term I should be saying? Like
Abstract.
Like what is tangible capital assets
header
gross
of the
CA
table.
12? What are the
header.
headers of the table within receivables? that you might break that out if there are any,
There
right? So I would
and the
think
way we
so.
broke them down related to customer, to the type of revenues, coming from customers, coming from taxes.
And I wasn't trying to get you to go into that, but those choices to me are very, I think, important choices to pay attention to. I don't disagree with those here. It's just, it was interesting to hear. How you did it.
It was very hard. I mean, I think we went through, gosh, I can't remember how many iterations to be able to get here, because we will put them together and then we print them out, and there are pages and pages and pages, and we're reading them going, are they structurally consistent? They make sense. And so we often through the iteration of the modeling have to revise. The ones that we're not looking forward to is cash and investments, and particularly the combinations and the difficult. So in some cases, we're trying to keep the combinations out. In some cases, we won't be able to. Cash and investments is something you cannot avoid. And if you go look at the particularly pairs reporting for that, the disaggregation of all that is incredible. And so we have to be very mindful to create a structure. Then when we come back, Christian mentioned this in the presentation, when this is designed mostly for government-wide. So we did is extract data from government-wide and we model it this way. And this is the structure we settle. And where we're trying to be very mindful is when we come back after the DM and start having to populate proprietary funds and all the other funds, what additional information do we need? And do we have a structure that would just allow us to put additional line items in an organized manner? So for example, we know that certain BTA governments engage in business, special purpose engage in BTA, infrastructure line items like transmission lines or things like that. They're very important to certain industries. We need to add them. But do we have a structure, enough good white lines that would enable us to put that back in and be able to structure? So that's a little bit of the challenge of the design of the data structure today, because what we want to is to be able to repurpose all these clusters and then drop them into each of the modules of the financial statements.
So Paulina, did I hear you correctly, right? So I think I heard you say, like, in this buildings improvements thing, right? You're saying we'll have the first two lines, we won't necessarily have the third. Right?
We might simplify it, but it's not always going to be consistent.
Well, that's what I heard you say, right? So I heard you say now, because I'm like, okay, when the cash comes, I'm going to see cash and I'm going to see investments and I'm going to see cash and investments. And I'm going to say, Paulina, you didn't do that with buildings and buildings improvements, right? And I think you're going to come back and say, is it because of prevalent practice? Like, I just can't not do it. This one, I cannot do it and have them do this thing. But when they're so common, I got to give the breakout and the aggregation.
Definitely, it's the operability of it, and think about it in the context of what facilitates comparability. So the better you define taxonomy, define line items, the more comparability in the output of the data you can drive, because then all the governments that have cash and investments would put in the same line instead of having to create a government specific call cash and investments and then potentially ping it to the wrong department, and then you end up off into the races.
So this is probably about time to maybe even break really quickly and then move on. But I keep coming back to this, so I'm just going to ask it. It's almost like the I don't remember the headers, the subheaders of the table. In CA13, you created a subheader for buildings and buildings improvements. Isn't it duplicative to then have CA15?
Because you cannot use C13. So the white items, which are headers, are not pingable as a tag.
Right. But I could have created my own tag for buildings and building improvements and then just associated it with that header.
You got it. Yes.
Okay. All
Yes.
right. Well, okay. It kind of seemed like that's where you were going, but I kind of missed it somewhere in the thinking about whatever I was thinking about at the time. But okay. Was there anything else on this one in particular you wanted to cover? No, I'm not trying to rush, but
Jeff, you got all your questions right.
anybody else? Can we take a quick break? Like 11 o'clock, we'll start back. So, but if somebody needs a restroom break, we got 6 minutes. You ready? All right. That was longer than 11 o'clock, but that's okay. We'll start back. I don't want to rush you, we try to get done by noon. I think at this point, we'll see how this goes. Maybe it'll go quick, but we're not going to rush it. We're going to try to take our time. We're supposed to approve the tech plan, but if we need to, which it seems likely we will, we'll just punt the tech plan approval to the short meeting on September 29th. So I think,
I think,
don't rush through.
well, I think I wanted to show you what you want to see here. We can go through them DNA, and then if you want to, if we're at 11:30, then let's just do the tech plan and we'll put us in the short meeting. I mean, we have one more paper. It would be fine
Okay.
if that's okay with
We'll
you.
see.
That works
We'll
too.
play it by
That
ear.
work- Let's let's do that and get to those two things.
Just
so we
see
are.
how we go.
Thank you. So I promised to let you see how a tag set of financial statements look like. Yes, I'm sorry, Jeff, it's a little. So let me see. No bigger. Sorry. And it's a recognizable familiar person. So this is essentially how it would look like. You see, it reads like a normal person. It's a balance sheet. And the only nuance that you see is here, this tiny little line items in here, which are the tagging bits, okay? And so you ask, how would this work? So I wanted to take the lease receivable. And this is what any reader of the financial statements, not just a user, but anybody reading the financial statements would be able to do. So in every single tag line item that is bracketed with red, they will have the name of the tag, which is what you have seen. This is the reported fact. So the number, period of, the axes are all the headers that you have been working for the reporting model. It's part of a group of enterprise activities. It tells you things like, is reporting in US dollars, is a debit, is a positive number. This monetary amount is what you were asking Joel a little while ago. And here's the documentation. And it's, in this case, fairly long. Let's see. So in this case, they probably used the taxonomy that was designed for Michigan. So they just URL you into the Michigan thing. And so at some point it would have a codification, from our purposes, it would have a codification reference section and that link base to the code, to the GASB code. See? That was great, right? And so yeah, that one would hope that it doesn't. And so that's how the taxonomy works in a nutshell, is that when you present your financial statements, it's not doing what it needs to be doing.
So Paulina, I think it's interesting to think about how financial statements will be used in the future, right? If I think about investors, my guess is investors never going to look at the thing you just showed us and have all those highlights and stuff on it. They're going to get the beauty of digital financial information is that it gets electronically dumped into using our
relational
structure
database.
into their database, and then they're going to be using the bits of information. So they're not going to see all that. But you might think about a citizen user who right now sees the financial statements without all those lines and the descriptions you pulled up. Might that be beneficial for them to be able to see that? Maybe so, right? So it's interesting to think about how it can be used in different ways
I
in the
think
future.
even for the financial statement analysts, people who are going to have the database dump could also be beneficial because the way that a lot of the data aggregators do today is they provide the information, like you said, in a standard relational database. But they have features, they have developed really interesting features that is show like as reported and as standardized. So any modifications they have done to standardize is what they normally consume. But if the analyst goes, no, I'd like to see exactly as reported, they can come back exactly as they're reported to include in the government specific line items. And they could potentially have the HTML link where they can actually open the act first. So they don't have to just consume the strip number. Sure, for the calculations and ratios, they have the ability to quickly do that. But if they want to be even more critical and more analytical, they can go back to the source documents. So the data aggregators have become really sophisticated in which they provide not the stripping and the standardization is, of course, the biggest benefit anybody gets. but they have become also pretty savvy about providing the source documents, how it was reported, if they made any modifications to help provide a little bit more of depth. So
And I would just put a little nuance onto what you said, Joel, because, you know, what we call users, right? So there are certainly big time users like rating agencies where I would say, yes, the basic analyst is going to get this information fed to them, and probably, as you say, but before that information gets fed to them, that agency has a lot of senior analysts and tech people going through that to say, do we understand what this number is? This is where we're going to feed it to the analyst. This is how it's going to make a calculation. Do we understand what that number is? Do we think it's right? Right? Have we cross-checked it against, you know, an ACFR to make sure that that number is in fact what we think that number? So in other words, they are going to be using that information to develop the models that they will use to feed the information to analysts, right? So I think in that sense that users will be using that to vet what it is they'll be producing.
Then it all comes to all those people that are using it, hover over it, see that description. Do you want a whatever similarly constructed syntax description that the team comes up with and that may or may not be the same as GAP, or it'd be their interpretation of the best way to structure GAP to get to those words? Or do you want the GAP words when the GAP is applicable? I don't, it's kind of circular conversation with it. I'm sorry. I'm sorry.
it's a very fair point, but definitely appreciate the feedback. So unless the board has any other questions about capital assets, we would like to discuss MD&A. Kara is going to lead us.
Thanks, Paulina. So paper 2 discusses the project staff's modeling for the MD&A, and this model that is presented is based off of the requirements pursuant to Statement 103. Just to take a quick step back, at the March 2025 meeting, the staff discussed with the board the approach to modeling unstructured data for the notes to the financial statements. And this slide depicts an example of the notes to the financial statements and highlights 3 levels of detail for unstructured data. Level 1 is used to identify unstructured text, including narrative, table, tabular, or image formats, which are marked as text blocks and can be used to cover an entire topic. And as you can see on the slide, the entire note 3 is captured by that blue box, which encompasses level 1 data. Level 2 is used to identify unstructured data points presented as tables or schedules. So now we see that orange box, which encompasses the report within Note 3, which is a report on lending securities. And then level 3 is used to identify data points included in tables or in narrative content of unstructured text. And this can be data other than text block data, such as numeric data. And then on the slide, you can see a green underline, which shows a specific structured data text within that schedule. Following this approach, a taxonomy user can choose to use a larger text blocks for their entire section indicated in blue, but also have the option to break the section down further to capture a tabular format, which is in orange, with another block text or with structured data in the narrative or tables. So for MD&A, the first design issue is to determine the level of granularity for modeling level 1 unstructured data. And the project staff identified 3 options. So option 1 would apply to the entire MD&A and put it all in one single level 1 text block. And this would include all of the 5 major sections of MD&A pursuant to provided in Statement 103. Option 2 provides a breakdown of MD&A by more discrete components, 4 to be exact, which are the overview of financial statements, financial summary and detail analysis, significant capital assets and long-term financing activities, and then currently known facts, decisions, or conditions. I'll note that although the financial summary and the detailed analysis are 2 separate sections in Statement 103, The illustrations provided in that standard presents the financial summary intertwined with the detail analysis because of their integrated nature. So therefore, we thought it reasonable to combine those two topics. The image on the slide shows the identified blocks of text for the MD&A, with the dark green box depicting what we call level 1-1 detail, which is the entire narrative of the MD&A. And then that light green box shows one of the detailed components labeled as level 1-2, which in this example is the overview of the financial statements. And we would note here that for option 2, it also includes the level of detail, which would be included in option 1 as well. Option 3 provides the most disaggregation of all the options, and as you see on the slide, option 3 provides more granularity when compared to option 2. So for example, you can see a line item of capital assets and long-term financing activities is further disaggregated to a description of significant capital assets during the year and significant long-term financing activities during the year, as shown as level 1-3. In this option, we also have created an option for government-specific information as well. This is because the reporting requirements for currently known facts, decisions, or conditions identify 5 examples of applicable items. However, these examples are not all-inclusive, and the guidance also provides that for any other item that would meet that reporting requirement, it should be included in the MD&A. And then here's an example of that government-specific item. It's related to the COVID-19 pandemic, and the taxonomy captures the title description highlighted in yellow, and the block of the text is content outlined in blue. And then to tie those values together, we have a unique identifier also included in the report. And then, as I said with option 2, option 3 is also additive, where if this option was used, it would also include option 1 and option 2. So the second design issue is reporting unit requirements. Reporting requirements for MD&A generally emphasize that the information should focus on the primary government, but governments will have the option to incorporate information in the MD&A about component units based on their professional judgment. If a government chooses to incorporate that information, guidance generally provides that the information should be presented separately from the primary government. In addition, concept statement number 7 highlights that notes to financial statements may be disaggregated by reporting unit. So while the MD&A should focus about the primary government, we believe that the taxonomy should have an option to expand by reporting units as well. So therefore, the second issue that we considered relates to the headers on this horizontal axis, and what headers are necessary to incorporate reporting requirements for both MD&A and the notes to the financial statements. So as you can see here on the slide, we've developed headers that can be used to disaggregate either by the MD&A or the notes. We have it broken down by primary government, including governmental activities and business type activities, as well as discretely presented component units, and also by funds. And we did this in order to allow preparers to capture information by reporting unit. And then the next 2 slides just illustrate each of the 3 options I presented in combination with those headers. So here is presented option 1 and option 2. And then this last slide is presented with option 3. Oops. When considering which option to model, as discussed before, the decision to disaggregate information in unstructured data involves cost-benefit considerations. More granularity imposes higher costs to preparers due to tagging work. We reached out to a group of users of financial information to better understand the current usage of MD&A. We found that usage is more foundational for users, and that is they use it as a first step before analyzing the details within the financial statements. When presented with these options, these users generally found the disaggregation of option 3 a little too detailed and were concerned that the information would lose context if disaggregated in this manner. So we believe that option 2 is the best option because it allows for MD&A to be provided in one text block, as shown in option 1, which would allow users to absorb information in a manner that would provide context to the financial statements, which is how they are currently using it. But it also offers flexibility by providing an option to further disaggregate by the sections of MD&A outlined in 103. And we believe that this may be beneficial to users in the future if the use of MD&A may change. So we have 3 questions for your feedback. Question 1 really relates to these 3 options of the level of disaggregation of the MD&A. So what feedback does the board have about the granularity associated with MD&A?
Jackie?
So I actually did the Goldilocks approach on this. Option 1 was too little, option 3 was too much. So option 2 to me seemed like it was just right. And because even though the users seem to indicate that they could live with option 1, I know that there are other types of users that would like a little more granularity. And I think that the approach you've taken to try to break it down according to what we've indicated needs to be included in the MD&A is great, provided that the preparers actually give you that information in a format that you can tag and extract. Option 3 is just too granular. I think it's way too much to tag.
One thing that I would love to clarify, if you don't mind. So we have encountered, I think, one of the stakeholder outreach where preparers showed us an MD&A that was compliant with all the requirements, but had taken an approach of organizing their information based on 3 goals, 5 goals, something like that. And so for every goal, they have the 5 little chunkatives of things. If you were to use this taxonomy, you don't have a problem with that format, because what you wind up happening is 5 little boxes of overview of financial statements. Well, probably, hopefully that's only 1 box, but if they have 5 overviews, they can have 5 overview boxes tagged. And then when the data is extracted, it can either be brought back to a single set of overviews as a concatenated amount, or it can be presented, whatever the preparer does. So by us having this structure does not impede a government presented in a different order, in a different organization, by goals, by priorities of city manager. So the idea of text blocks in the taxonomy is very, very pliable. And just because you have currently known fact, decisions, and conditions as 1 box, doesn't mean you need to use it 1 time. You may use it 5 times because they spread out in 5 places. And so therefore it allows you to do whatever the government wants to do would be able to be tagged.
So my concern wasn't quite as much that as it was them including several different ideas in a paragraph. So several, and how that might extract, because they could write a narrative that talked about these different ideas in the same paragraph to some extent, if they thought that was a better way. We haven't seen how they're going to do it yet. I'm kind of hoping they do it more like you and I are thinking about it. But that was my only concern, that if they did something like that, then we were really going to be difficult.
I had a similar, I don't want to say concern, but thought. And I was trying to interpret when you said option 1 is embedded in option 2. Does that mean option 1 is embedded in option 2 because option 2s can be aggregated and end up in effect in option 1? Or would a government that did it that way, and where the paragraphs just didn't align to different sections of each of the 5 sections, and they just wanted to have 1 big box and say, this is the MD&A, they could still do that,
They can do
right?
that, absolutely,
Okay.
yes.
That's what I thought I read. And so to me, I don't know. I don't know if you're done, Jackie, but I thought, similar to Jackie, that option 2 was kind of the right approach. Again, the users seem to say option 1. I don't know. It just seems logical that there's benefit to the sections, but anything beyond the sections, it didn't sound like users used it and just seemed like too much complexity. And work to add in for that. I don't know. My view wouldn't be useful, and the users haven't told us. It seems like it would be useful. So I agreed with option 2 because especially the clarification of option 1. That's what I thought. Robert.
I also agree that option 2 seems to make the most sense, middle ground, whatever, Goldilocks, however you want to describe it. And, I'm looking at it as, I don't know how you describe it there, Joel, but I mean, 2 builds up to 1 in my mind. And so, I'm looking at it and the way you present it with the different colors, and it helps me visually, in terms of overarching and then in between. I also don't think that, even though people may get more creative, but if we prescribed 4 distinct sections, they're probably going to do it in that way, and for the most part, and break things down. But if they still have the flexibility where if they don't do it that way, and you can tag, as you said, probably in like 5 different things that fall under the heading, that one heading, then I think that would work.
Thanks, Robert. Jeff?
So I came out with option 2 making the most sense. I noted it's kind of a challenge, right? Because we're sitting here trying to figure out the future usage of MD&A in an potentially entirely different world of consuming MD&A. I noted that because the users that we talked to are like, oh yeah, I look at the whole thing, get context, like in a future world where time is going to be even more at a premium, or is that the way they're going to consume it, or is AI going to read it and they're going to have some sort of thing that says pull out the significant things? I don't know. But I think that the option 2 approach for now is reasonable. I did, what Paulina was talking about before, I did remember back, right, Roberta, we had this potential implementation guide question, right, where we went out and said, do these 5 sections, they should be in this order. And we got a lot of blowback to that, right? I don't want it in that order. I don't think, and so we didn't say you had to do it in that order. And so I think the way we have them listed doesn't matter. However they order it, however they select the boxes, right? So order doesn't matter. So I think we're okay there. But then the other thing I thought about was this merging of financial summary and detailed analysis. So I get why you would merge them. Totally. We illustrated it that way. My only hesitation was, should that be the default? Should the default be that they're merged? Or should the default be that they're not merged? I don't know. Because we illustrated it that way, does that mean you couldn't do it another way? Or would the person who didn't, in fact, actually had 2 separate sections, they would just take that one thing and tag both sections to that one item? And is there anything wrong with that, right? Like, probably not, right? In which case, then I think maybe there's no problem, right, with having the default be the 2 of them merged together. Again, this is going back to your way we have it listed, Joel. I'm thinking we got 5 listed. And here we have 4, right? And so,
Yeah, but they encompass all of GAP, and they're used the same description GAP does of the sections. But
so that's why
what
gave me pause, right? But then I'm like, as I think through the ramifications of that, do you end up in any harm of that? I don't think so, unless anybody comes up. So that's where I'm like, okay, it seems like that would be fine.
And GAP didn't say it has to be these 5 sections. GAP said it has to include these things, right? And so
Another point that I thought it was really interesting to communicate is when it wasn't a large number of users, and we do plan to speak with more during the discussion memorandum exposure. But one of the things that I found really interesting in the conversations was whether we prompted them or they just spontaneously shared. They did not find a need for the taxonomy to include how Kara explained the taxonomy structure is like this. So you have text blocks in blue, and then within it you have a level 2 for tables, and then a level 3 for data within the table. So each data point in the table. The users told us we never look at the numbers that are presented in the MD&A because they're not audited numbers. We like to look at them in the face of the financials. And so they felt that tagging the tables and then tagging each data point may be a piece of work that they would not think that the preparer needs to do because they're always extracting it from the face of the financials. So again, we would have to think about very carefully whether within the taxonomy and the subsequent iterations we will create a level 2 and a level 3 for data extraction. If the government, if the user is consuming that information as a part of the narrative, as opposed to analytical purposes, but they're using this, the way they describe to us is we take those things and we use it for context. We use it for narrative purposes. We're trying to understand what management is telling us about the direction and overall. And so from that perspective, it's likely the data tables, we would have to talk about whether or not the effort of creating a level 2 and a level 3 is necessary because the consumption is more as a text.
That's the purpose of the DM, right? Like that's the feedback you want, right? Like, would you ever care about that table as a separately consumable item?
We would have to be careful about that table because the other piece that we always are trying to be very careful is to not convey that something that the board has put as a reporting requirement isn't needed, because then we're doing back again to the problem of are we challenging gap? That's also not the purpose. But rather, what is the mechanism of consumption? And what they told us that they read that all that information, including the tables, as context. That when they do analytics, they go to the face. But when they look at that data, they're reading it to just ground themselves into what those financial statements as a whole are going to say to them. But then, therefore, the granularity is unnecessary, and we're not asking the question of challenging the usefulness of the information. So we're just trying to understand the level of effort that a preparer would need to put to disaggregate that information or not.
That was really kind of question 1. Like I was holding off on thoughts on question 2, but.
Okay, the second question is, what feedback does the board have about the reporting unit headers for MD&A?
The headers. So if I'm recalling correctly, maybe Roberta, you'll be proud of me. I think we discussed when we were doing 103 in MD&A whether aggregate non-major should be discussed in MD&A, and my recollection was the board came out and said no. It should be a discussion of major funds, not non-major funds in the aggregate. Which, if we actually debated that thing and made that decision, that would suggest to me the non-major fund columns here should not be here, because we don't want any discussion of non-major funds in the aggregate as it relates to MD&A.
We will gladly remove it.
Jackie?
But did we prohibit it? Because if we didn't prohibit it, I
No,
can
no, no.
see that somebody.
Well, it is required supplementary information, but but the question is, would they voluntarily provide it even though it's an
So
RSI?
this is the challenge, and we run into the silent issue in the headers of the types of governmental funds. So in circumstances, the board was comfortable with the idea that if the board consider any option, so this would have been the option of present that information, and the board rejected it, the guidance generally is not prohibiting. The guidance is prescriptive. And so we would not be putting those issues in the taxonomy. If the board would have never considered the issue and would have never debated whether non-major funds should be, then it's an option and we should leave it there as an optional. But if the board rejected, like they did on the headers for the type of major fund, we remove them from the taxonomy. So because the board rejected, we remove it from here.
The only reason I ask is that sometimes a non-major fund, even though it's non-major, has important information in it because of the type of fund it is. So I could see where somebody might provide information on it.
And so then it would be associated with the primary government.
I will say I struggled here. Some of it's coming back to the users say they just use this whole thing as one thing. And I understand that the gap says to report discretely presented component unit separately, identify it separately. It should be separately identifiable. And the governmental activities should be separate from the business type activities and the financial analysis. It feels like we're adding, to me, to have any of these headers identified and not just go with the 5 text boxes. We're adding granularity that users say they don't use. We're adding complexity when the text boxes should have this separate identification within them, right? Because the MD&A still had to follow GAP. It still had to identify separately the discretely presented component units. So within the text box for analysis or whatever it's in there, there's going to be separate identification. But having this granularity, I don't know. It feels a little much to me and overly cumbersome given how the users use it. But and I also think it's going to be difficult at times, like in the currently known facts and circumstances section, to break apart which, are they talking about governmental activities or business type activities or both, right? This thing that's coming, this demographic information, whatever, probably affects both of them. And so which one is it? I don't know. It felt a little much to me, but that was my view. Chris.
So just going back to the first question real quick, I do agree with the Goldilocks. And I know earlier when we were talking about the COD and descriptions, I said I wanted a lot, but this is fundamentally different to me. And so in this case, I think we did strike the right balance when talking about the MD&A. But to take it to question 2, I felt like less is more here. And the granularity, again, doesn't work in this space like it worked for me in the other space and the linking to the codification. Again, I feel like they're 2 different issues. Here, there's a level of redundancy that's also inherent in that you have the financials and you have the numbers. I know that's not the descriptions, but you have the numbers, but there's a level of redundancy there. And so I don't think, I agree with Joel. I do think that it's a bit much to have that level here.
It's easy to simplify it, so we can potentially have a design in which we have just a primary government, including blended component units and discretely presented component units, and the discretely presented only because they're explicitly spelled out in the literature. However, I'm not saying this is the right answer, just testing your reaction to a potential thought. Because question number 3 talks about the application to notes, in several note disclosures, you are required to disaggregate a little bit more. If the inconsistency doesn't bother you, I have no concerns.
Well, when we got to question 3, I was going to admit it might be a little illogical, but I have a little bit of a different feeling about notes than I do the RSI, mainly because of maybe how it's used and how the notes typically are structured. I did think about, though, how does the pension liability or the pension disclosure work when most of the disclosure is aggregated, but then, some of the pension liability is associated with the governmental activities, some goes to the business type activities or major proprietary funds. What do we do with the aggregate stuff that's all of them? So I even see problems there a little bit, but it makes me a little more uneasy to not worry about it in the notes the way here I'm kind of like, nah, just keep it all in one place. So, but I kind of am okay with a little bit with the inconsistency, and the notes are a different level of communication than RSI, and they kind of different purposes. And so I was comfortable with it, I guess, to answer your question.
And I think that's just want to make sure, because if we were to drive that inconsistency, it's easy justifiable that this is RSI, not notes. But just wanted to make sure again, so it would be beyond Jeff's concern about non-major funds. It would just be stricken down to 2 things.
As an option, right?
So do you want, if anybody, question 3 too? Essentially, you kind of opened question 3 a little bit.
Question 3, what feedback does the board have about reporting unit headers to be applied to the notes to the financial statements?
And I just said my thoughts. Other board members on question 2 or 3, any thoughts? Jackie?
I think I'm okay with what Joel is suggesting and making it more simplifying it for the MD&A. I'm assuming that would be for all RSI, not just the MD&A.
So that's now you're poking into a very difficult question. We had worked through some of the bits of MD&A, for example, for pensions and OPEB schedules, and then we developed the financial reporting model structure. So we have to rethink a few things. So stay tuned. We will let you see how that looks like. But as we create, what it becomes more, and it's sort of a little bit what Joel alluded in his answer, what it's feeling like is like, well, this is the ideal conceptual framework correctness that you're supposed to disaggregate by every reporting unit. When you start thinking through each application of every module, it feels slightly not always aligned. And
Because the pension and OPEB RSI schedules don't necessarily break out, right? Between, especially governmental activities and business type activities, much less, I don't think it requires
but there
if a
is a
pension
relationship
covers
to
discretely
reporting
presented
to component
components and,
that
yeah,
right.
but then the budget RSI schedules,
It's-
which is this whole other thing, you're gonna probably have different
But
reactions.
do we say anywhere? I mean, you mentioned here concept statement 7, which I think is right, says notes have to be by reporting units. Do we say anywhere that RSI has to be by reporting unit?
No,
So
that's what
why
I
are
mean. It's
we
easy.
going here? Why are we extending it to
It's easy
RSI?
to justify that. It's easy to justify that, and that report requirement doesn't apply to our side.
Yeah, so like,
It's not the conceptual framework, but 34 talks about in the MD&A or 103, in the MD&A, discretely presented component unit number action should be separately identifiable. So even the conceptual framework doesn't, the standard talks
Yeah,
about
but
it.
just as it relates to.
Flip back.
Just as for discretely presented component units, right? Just for that thing. And yes, I agree, because the standard says that, but as a default throughout all the other RSI, what are we defaulting to? Reporting units? Why are we defaulting to reporting units? We don't have a requirement to go to default. So we go with what the guidance says, and we go to that level of breakout for RSI and nothing more than that, right?
And I'm very okay. I mean, thank you. No challenge with that statement at all. Just understand that the application, then the outcome is inconsistent, which that's what guidance, that's the reflection of guidance. So I have no concerns or trouble with the feedback. Just want to make
But
sure.
it's just practically inconsistent.
I
It's
know, I
not
know.
conceptually inconsistent.
Correct. It's application, right? Because as Joel alluded, the pensions is only one of the notes. For example, if you have to look at the disaggregation of receivables and payables, sure, you're supposed to disaggregate, but some people do it in a narrative format. So I'm not 100% sure how that's going to model when we get there. So there are practical limitations that this is sort of like the ideal of how we would operationalize, but we have to be very mindful about how we're gonna apply technically. We foresee circumstances for example, this morning Pam and I were discussing risk uncertainties disclosures, and so you have the primer is for the primary government, right? And then you have by any reporting unit that is associated with revenue debt. Do we put fiduciary funds in there or not? You have to put them. I don't think they'll happen, but if you don't put them and the government does it. So see, this is the practical application for each disclosure. It's a really interesting conversation. So the feedback is super helpful, but understand that we may be in a mode of where we will have to permutate through the application as we get through each module and every component of even disclosures and RSI.
Very much appreciate that conversation. Is we're all working and learning, and we haven't got to all of it, and it's hard to think of all the things, and so we will learn and evolve as we go. So I appreciate that. Any other board questions, comments, feedback on this paper? All right, we have a hard stop at noon, just 12 minutes away. I'm assuming we shouldn't start paper 3. It would not do it justice. So we will, unfortunately, punt you to the September 29th meeting. We will plan to go through paper 3. We also are supposed to approve the tech plan. I don't necessarily want to have to cut it short. So maybe we punt it till September 29th as well, unless any board members really feel like, I mean, there's not some changes in the tech plan. There's no new projects added, so it's not big changes in the tech plan, but would you rather hold the discussion for the tech plan until September 29th? Yes, okay. Let's do that then. That's fine. That's fine. I think we need to start at 8:30 sometimes. Maybe again, we need to revert back to no more than 9 a.m.s.
That would have been a good idea.
Yeah, it's all this,
Hindsight 2020.
sleeping in, you guys are doing. All right, well then, thank you, team. I appreciate all the work. It was an interesting discussion. This is certainly a different project, very important. And it's interesting to see it and learn as we go a bit and see it evolve. But I appreciate all the work, a lot of work, and appreciate the presentation materials and how you structured it. It does allow for a good conversation and for us to absorb it. You guys are in it every day. Us, we kind of step into it periodically, but the way you organize it is certainly helpful. So thank you. Thank you for that. And we'll see you on September 29th. So with that, we're ending 10 minutes early at the board meeting. We will come back for a short video meeting on September 29th, but it will not start till 2:30 p.m. So 2:30 to 5 is the time we have. And we have a couple of things that we have to get to. So we'll work on the agenda fully for that, but plan to see everybody then. Thanks, everybody. Meeting adjourned.